Thanks, Nicole.
Thank you. And just a reminder as well, just to put yourself on mute so we don't hear your background unless you're going to be answering or asking a question. That would be much appreciated.
And feel free to ask questions out loud or put them in the chat. Either way is fine. So I'm just going to kick things off. Hi, everybody. My name is Desiree DeBerman, and I am one of the founding members of Local Street. We have a number of the partners on live with us today. Tina's one, and Emily Bassett is another. So we'd all like to say welcome to you. And in case you don't know, Local Street is an online marketplace that helps people to find and support their local businesses. And we also offer a number of business supports, like this one today, which is an educational event. So for today, or I was going to say, if anybody has any questions about Local Street, please feel free to contact any one of us at info@localstreet.ca. For today, we are talking about business financials, and we have a person that we've known and has supported us for quite a long time, Patricia Dent. She is a phenomenal business coach and has an incredible amount of knowledge that she is willing to freely share with everybody today. And with that, I know that there is a bit of a bio in the slide that will cover off her experience, but we'd like to thank Patricia and let her know how thrilled we are that she's able to do this. So with that, I will hand it over to Patricia.
Thanks, Desiree. That's very kind, and I will unmute because that will work better. Okay, just before we get to the bio, I want to say that I'm here to talk about everybody's favorite topic. I know you love bookkeeping, how to keep your numbers and how to know your numbers. As a business owner, it's one of the most important things you will do in your business, because even though for many of us, it's not exactly our favorite activity, I found that the tax department isn't always understanding if you tell them, I didn't know. So this is what we're going to talk about. The questions that come up most often in my classes. I have a training program called Ask for Directions Training, which is online. And this is what we're going to talk about. The questions that come up most often in my classes and when I'm consulting with other entrepreneurs. So if you could just change the slide. This is me. This is what we're talking about. I apologize. Pivoting quickly, which is we've become used to. So I think we're going to cover tips and also mistakes that people should avoid, which will be a good one. And now you can change the slide and we'll talk a little bit more about me, just because I want you to understand that I have been acquainted with this topic for some time. I've actually been training and coaching for 13 years. And not only do I own a training program, it's something that I'm very passionate about. I have 18 instructors, in fact, who are very specialized. So while I'm not an accountant and I'm not a bookkeeper, I am familiar with this material to the point of almost obsession, because I know that it's one of the difficult things that people sometimes encounter, and they don't always keep up their books. So if you if you want to ask any questions, as Desiree said, by all means, please let us know. So let's dive in to the first slide, which is know your numbers. So what happens if you don't know something in your business? I know that if you don't have a coach or a trainer that you can rely on, that we generally go to Google, or we generally go to ChatGPT lately. And you'll have heard that people are making the comment that ChatGPT does not necessarily define true information from false. So sometimes we just don't have a reliable source of information to go to. And it's often why I will say to people, really, you probably need to talk to a bookkeeper or an accountant once you get to that level. If you're starting out, you may not be there yet, but it's one of the first things that I recommend is at least a bookkeeper. Accountants, not necessarily. There are some situations where you'd want to do that. But knowing your numbers is so important. Why? Because there are incredibly smart and generous and positive bookkeepers and accountants out there who will let you know all of the implications of your numbers if you don't really have a handle on it. Not everybody does. So if you want to make sure that you're not making some really critical mistakes, remember to get to know your numbers. You may not want to actually do all of the recording and the bookkeeping per se. Many people want to start off doing it because that's one way they do get to know their numbers, but you may not love it. I don't do my own bookkeeping anymore. That doesn't mean I don't know what's going on or I don't understand my numbers. So it's something that you can give up later, but get to know it first. Now, why do you want to do that? Do you understand what your costs are? Do you know the implication of getting to the end of the year to see what you have left over? If that's a guessing game, that's pretty scary, particularly if you're a solopreneur and the end of your year is December 31st, right? Then you've got to submit taxes, as we all do. But one of the things you have to have an idea of is what's left over. How much are you being paid? How much do you still owe if you're in the red? And let's face it, it's been a very challenging period in the last 3 years. Things may have been up and down, but this is a perfect time to put some systems in place so you know. For example, you may think that it's a very easy example. Let's talk about websites. When you look at building a website and you're an early stage entrepreneur, or even if you aren't, those can be $3,500 to $6,500 or more, depending on how many bells and whistles there are. That seems like a huge amount. So you may elect to go to a subscription service such as Squarespace and Wix. There are a few others. That's easier, it's pretty, you do it yourself. And of course, it's only a small amount per month. But how much does that amount add up to over time? At what point does it surpass the cost of a website? Although, to be honest, you also have to have somebody do some adjustments to your website if it's complicated, or unless you learn to do it as well. A personal example you might resonate with, one of the exercises one of our classes did was to say, okay, how many hidden expenses do I have personally? Let me ask you a question. How many streaming services do you have? If you have different age ranges in your house, you might have Netflix and you might have Prime and you might have Disney, and there are a list that go on and on and on, correct? Have you ever added up what the annual amount is for that and for every single streaming service? Sometimes day-to-day can allow us to escape what the ultimate or the yearly expense for something is. So whether it's personal or business, it's a good idea to have a review and just say, what am I actually spending on things? Because if you don't know, that can be a little unnerving if you find that your cash doesn't meet the end of your year. So if you're not prepared for tax payments, and we'll talk about that in a minute, because it is usually end of year, then you're going to have to make some arrangements. Not a pleasant thing, but we'll talk about that in a minute. What about the positive part of if you, not only are you prepared for tax payments, that's kind of a cool thing, but what if you want to obtain financing or you come across a really cool grant? There are other factors involved, like you have to make a certain amount of money. And we'll talk about writing off your income in almost its entirety as a very negative thing to do later. But what if you had an opportunity and you didn't know your numbers? You're going to have to get to know them really quickly to be able to take advantage of a financing or a grant opportunity. So those are things that mean that you should keep up with your books so that you can take advantage of those opportunities. Let's talk about cash flow. So if we can change slides, that would be great. Thanks. Piggy banks are my favorite things. I don't think we can get by in business with piggy banks, but it would be cute, right? It would be great. So why is cash flow different from revenue? Well, revenue is all that money that you're making. If you have money coming into your business account, yay, that's fantastic. And it's really reassuring to know that you're on the right track and serving your customers. But there are other uses for that incoming revenue. It's not free money. And cash flow is the way that you anticipate the expenses you've got to pay in order to serve your clients. We don't just usually have revenue without any expenses at all. After all, you have bookkeeping, you have an office, you have different things that enable you to serve your customers. Okay, so just because you are receiving revenue doesn't mean it's all yours. What you have to keep in mind are things like, and we're talking about taxes a little bit, that's for sure. But you have to put aside taxes. And there are more things than taxes. If you have employees, you're putting aside deductions on their behalf. And you're putting aside your own taxes. And you're putting aside HST if you're HST liable. Now, during the pandemic, the government was a little looser. It was also a little bit behind on what they were doing. And they were a little more understanding on the tax front. That is no longer the case. One of the things we do is have our accounting and bookkeeping instructors let us know what the current focus of the government is. And one of the focuses right now is everybody pays their bills. So the big one is HST. If we don't stay on top of HST, that's actually government money, not ours. So we'll go through that in a couple of minutes. That can have some serious consequences. So once you take away the payroll deductions, the HST, the tax payments, and the cost of providing your services, you might want to pay yourself. You might want to put some money aside for future plans. What if you know, in fact, just before we started this session, my husband and I were staring at a rather old computer that holds all of our bookkeeping software. And yes, we back up everything every day because you don't want to lose your numbers. But we're trying to think, okay, so how much should we put aside for a computer that's separate, that's off the grid? Because that's what we had decided we wanted. If we hadn't put some plans in place for that, then it would be a bit of a stretch and we might use the dreaded credit card, which we'll also talk about later. Paying yourself is something at the beginning that seems strange. It seems, maybe not possible because there are a number of startup expenses. But if you're past that and you want to start paying yourself, one of our tips, we have a money coach and financial person who does our pricing. And one of the things she says is start small, even if it's $25 a week or a month. It doesn't matter. Getting used to paying yourself is important. And often I see people who just don't even imagine paying themselves at all. So just start small with that. And then one of the things that you'll find is that it becomes easier to get used to the idea and to give yourself a raise because you probably deserve it. One other story I wanted to tell you was we used to do information sessions in person before we started a cohort. And one evening, there was a lovely woman who was all set to join the classes, and that was great. And she took me aside. She said, "Can you just talk to my husband for a moment? He's in the car." I said, "Sure." So in came her husband. One of the things he said to me, I've never quite heard it get to be this bad. And it's all about ignoring your finances and ignoring notices. We'll talk about the little brown envelope from CRA later. But he absolutely ignored all of the signals from CRA, didn't pay his taxes because he couldn't afford to, or at least he thought. He actually didn't know anything about his bookkeeping. And what they did was froze his bank account. That was a little extreme, but there are consequences. So I want you to take it seriously. Manage your cash flow. It is probably one of the most important things you'll do. And may I have a slide change, please? Okay, because we love taxes because it's intrinsically, tied up with finances. What about barter? And you're probably going to hear a number of people say, you know what, I can't afford to do all of this stuff. I need some services. I'm going to barter. I don't know whether a number of you do this or not. And there is a way around this, but here's the downside of barter. If you lower your income, and we'll talk about this more in depth in the next slide, then you may miss out on opportunities. So the best thing to do is declare your income and remember you're going to pay taxes, but also understand we like schools and hospitals, right? We do like the services we get. Our taxes pay for services. So just remember that. But the other thing is, if you don't show enough income, it really could affect your business. One of our grads, who was a plumber, decided that with all the pressure on bartering in the trades, and there is a lot, don't kid yourself. What he decided to do was do about 50% of his income in barter. So there was never any paperwork on it. For one thing, have you ever thought, what if you wanted to complain about workmanship? That's not going to be possible if there's no record that you've actually bought services, but I digress. What he did was then went to just renew his mortgage. Now, those of you who are entrepreneurs will know that we have to qualify a little higher than people who have a 9 to 5. And it's called the stress test. He couldn't qualify for his own mortgage. He didn't not have the money. He hadn't declared it. So officially, as far as his mortgage broker was concerned, he didn't have that income. And he had to actually come up with another way of officially having that money. So I believe he borrowed money and paid down some mortgage so he could qualify. That was a real wake-up call for him. One of our other tradespeople, who also is or was under pressure, decided he would include the HST that was payable into the fee, and he refused to do bartering. Now, suppose it just doesn't make sense for you to buy everything, right on the books at the moment. One of the things that people do sometimes is trade invoices. So show that you've actually purchased services and pay the HST if there's HST owing, because that'll allow you to show that you have that income. So please don't limit your income. It's one of the things that can really mess you up. Okay. And again, I'm going to say it again, set aside tax money, because that's really important. And I've mentioned at the bottom of this slide, the algorithms. Remember the little tax code you have on your income tax? Whether you're a sole proprietor or incorporated, you have a tax code. It is an industry code that allows CRA to use their algorithms. I know we're tired of algorithms, I get it. But they use their algorithms to compare different areas, different businesses across the board. So if you're doing something that stands out, you're going to be obvious. And actually, I have a personal example of that. It doesn't seem like it's a big crazy thing, but one of the categories for CRA taxes is professional services. The way the government defines it, it is for legal and accounting. That's what they mean by professional services. However, I have 18 instructors to pay. And in 2016 and 17, I was paying them using that code. Professional services, that's the bucket I put that expense in. Well, not in 2017 or 2016 did they contact me, but they sent me a lovely letter in 2019 saying, hey, could you provide us all of the invoices that you passed through this particular code? And the reason was, according to my accountant, they disagreed with the definition of professional services, and they wanted to make sure I wasn't hiding anything that wasn't appropriate. 183 invoices later, for 2 years, we copied them and sent them off. And about a month later, they sent us a lovely letter saying, okay, well, we don't know whether your taxes are good for those years. This is not what we're saying is good, but you're okay with this definition of professional services. Whew, right? Just one of those things that you don't think is a big deal, but they do watch. So I want you to think about that. And the other thing on the slide is, what's the difference between sole proprietorship and incorporation? So just quickly, because I'm sure you are probably aware of a lot of these things. Sole proprietors combine all aspects of their income. If you have a 9 to 5 as well as a side hustle, or a side 9 to 5, whatever it is, and you're making income as a sole proprietor, then all of that money is counted when they calculate taxes. So sometimes people really go quickly into incorporation, but there are some differences. So if you're a sole proprietor, you can have somebody do your taxes or do it yourself. You have a portion for your personal expenses, a portion for your business expenses in the same tax form, and you calculate everything, right? And if you're going to incorporate, usually you do it so that you are keeping some money in the corporation and you don't have to use all of your money to live on. Also, you would incorporate potentially if your business is taking off and you're also making this other money as an employee, and now your tax rate as an individual is going sky high. So keep an eye on where your tax situation is so that you'll know if it's a better thing to incorporate or not. Please talk to an accountant about this. They will be able to help you strategize the right time to do it. The attraction, of course, is that money going into a corporation is only taxed at, and I have to check the current year, but I think it's about 15% roughly. Whereas if the money that is going up and up and up as a sole proprietor gets to a bigger tax bracket, you're paying more money. The other thing that being incorporated does, which is worth considering, is it protects you from personal liability in most cases. And that's also something to check with an accountant. For example, if you are a professional service who purposely does something evil, let's just say evil, because you know it's wrong, and you are sued because of it, your incorporation does not protect you. But a regular person who's got an incorporated company, whatever suit is brought against the company generally doesn't affect somebody's personal, their home, any of the savings they've got, they aren't necessarily liable. So it's a bit tricky. It's a bigger decision, but I would have you have a look at that. Can I have the next slide, please? Let's start on the next slide while we're just waiting for that to come up.
Oh, this is the next slide, Patricia.
Oh, sorry.
This is a
Oh, okay.
continuation. That's okay.
Yes, because I put the same image on. Smart. Thank you for that. Apologies. All right. If you can't pay your taxes, what do? You've run out of money. You don't have the tax bill in hand. The best strategy is to file on time and then connect with CRA and negotiate. Do not ignore the little brown envelopes. Now, you may not have received many little brown envelopes, but CRA sends all of their notices, their HST, their assessment for taxes, and so on, and any review questions like I got in 2019. They send it in these little brown envelopes, so that I do know of people whose tactic was to throw the little brown envelopes in a drawer. Bad tactic. Don't do it. So that's not a really generous thing. The guy whose bank account was frozen threw the little brown envelopes into a drawer. But while they aren't necessarily the friendliest people, they're actually better than you think in most cases. So if you can't pay your taxes, at least file. Then give them a call and say, I'd like to negotiate a payment for this. They're going to try and get you to pay as soon as possible, but you do have a little bit of leeway. It's not a comfortable situation, but you know what? That's it's a thing that you can do. And rather than not respond to them, the thing is about not paying your taxes on time is that if you don't file, they can fine you, and they will, because they'd like to make money too. So by filing on time, you avoid having that kind of penalty. And they may put interest on a payment that stretches out. And of course, it eats into your next year's revenue. But if you're in that situation, please don't just ignore it because it won't work. Okay, Nikki, can I have the next slide? And I promise I'll look I promise. There we are. Thank you. HST. Okay, and the reason we put this up there is sometimes people get confused. Just a one comment that I should have said about negotiating with CRA. Hey, if you don't like what they're saying, ask for their supervisor. You don't necessarily have to get stuck with somebody who's cranky. They're very rarely cranky, but they have been known to be. So just a tip. So HST or GST, there is a requirement to register for HST if you have made $30,000 in income in the last 4 quarters. Here, the difference between 4 quarters, so 4 3-month periods, and annual. It's not an annual based thing. It's 4 quarters. And in that last month where you hit 30,000, you have to register for HST. And then you have to put HST on all of your products and services. So one of the things to do is keep an eye out. I actually knew somebody who was retired and working as a consultant, and he took great care never to get above 30,000. He didn't need a whole lot of money. He just needed to supplement. So he was always not HST eligible. On the other hand, if credibility is important to you in terms of how established you are as a business, you can absolutely register for HST at any time. But then you do have to make sure that you are charging HST on everything and that you keep going. It's not something you can do for a while and then not. You then would have to pull back your HST number and negotiate with the government if you decided it wasn't that important after all. So consider carefully. You know, lots of people know about the $30,000 limit. So, you know, think about it. Do you want to avoid having to do that later on and causing a little bit of cost shock to people? Because that's the other factor you might want to think about. Or do you want to wait until the very last minute until you have to? It's one of those incredibly static things. Nobody argues with the HST and they want their HST money. Now, the other factor about this is that it's a destination tax, which means that, of course, it's not always consistent across Canada. So we often have more, just a minute, I'm going to put something in the chat here. It's a link to the Canadian government's analysis of what you have to charge in HST or GST, depending, to your customers. There it goes into the chat. You might want to have a quick look at that because different provinces have different rules. Of course they do. It is the deal. So you don't necessarily have to, charge the same. In fact, you can't charge the same. So you do have to know what you charge for people in other provinces. Can I get you to change the slide? Great. Write-offs, the entrepreneur's favorite thing, because people think, great, I don't have to pay taxes if I don't have a lot of income coming in. So there are 3 main categories that I wanted to just touch on today. There are the meals and entertainment. There's home office, because we all have one, I think now. And there are mileage costs. They're pretty, government watches trends. And when they see a trend that they find alarming, then they'll make rules around it. So the rules sometimes change. And our bookkeeping instructor is coming in to talk to my coaching class very shortly. And we're going to check in with her to say, okay, what are the rules? What are the rules changing to now? What are they really focusing on? It's very useful information to have. Don't have that right now. I know that they are catching up on pandemic related expenses and so on. But I think that's about to change if it hasn't already. So what do you have to remember about write-offs? First of all, the cardinal rule is that you are supposed to be using expenses to earn revenue. So if it doesn't pass that test, then it's not going to fly with the government. And they've actually made some rules. One of the most famous ones that affects a number of people I know is that you can't claim a golf membership because they don't see that as generating revenue. We could argue that, but that has been the fact for a little while. So let's talk about meals and entertainment for a moment. No golf club courses. Also, they're very hard on cruises that may not seem like it's a business thing. And you might remember that as well. But when you're having a meal, that also excludes family pizza night, because unless your family is being sent out to work and walk the streets to, solicit clients and bring clients into your business, that's not going to help. What you need to do is have business meetings. And the other thing that I would advise, because they're asking more questions about business meetings in the last little while, that is, write down in your calendar, keep a calendar. Please, please, please. It will save your bacon. Keep a calendar with all your appointments. Don't care whether it's online. I used to have a big honking book because I wrote notes in it when we were doing everything in person. Now I have an online calendar. Keep that calendar with the person's name you're meeting with, the phone number, and the company name, because it will save you time later on. If you're putting in an appointment, just make sure it's rounded out. Do I do this all the time? No, I don't. I'll be honest. I'm a human being. But it's a good idea to do it as much as you can. So meals and expenses are only at 50%. And the reason for that is you have to eat. So one of the guidelines you can keep in mind is, would an employee be able to write off this expense? Well, when I was an employee, and if I took out a client for lunch or a meeting over cocktails or something, which I think sometimes happens, then I would be able to expense it to the corporation. And what they did with it, well, frankly, I wasn't concerned. But as an entrepreneur, one of the things you have to be concerned is that you're only getting 50%. Don't even try to write off 100%. That also includes gift cards, by the way. If you think you can get the whole thing written off, likely you can't. So think about that and write down the details. Home offices, one of the mistakes that people make is to say, well, I have a home office. Well, people use my bathroom, they use my kitchen, we make, snacks for them. And so there's a huge amount of space that we use for my business. It doesn't fly anymore, just saying. So usually somewhere between 10 and 15% of your total space as an office space will be acceptable. There is one major exception to that, and that is home daycares, which can have up to about 50%. They'll allow that because they know kids roam everywhere. You've got to be able to have different, rooms that are used for different purposes. The other thing to remember is that you don't use those side rooms, storage, whatever, 24/7 usually. Maybe storage you do actually, but you don't have a bathroom for everybody's use 24/7. So that's one of the reasons that they scale back the percentage. If you go above, they're going to ask for details. So how much do you want to be reviewed is the question when you go above that. There is another impact if you go way above the 10 to 15%. Suppose you've got a bunch of tools and they're in your garage, and so you're using a great deal of space for storage and so on. There is a tricky figure, and I'd like you to check with your accountants because these tax rules do change, but where you would have to account for that ownership of the business if you sell the property. I'm not going to go into it because I don't have this year's current information, and you need to have it be current. Things change. So do check with your accountant on whether the amount that you're claiming for a home office is going to be okay if you sell it. Mileage, our favorite. Yes, you can absolutely, if you want, not record mileage. I wouldn't do it because I know people who have claimed mileage and then they had to justify it as soon as they were called on it because CRA asked for their records. So I keep a spreadsheet and I track my mileage. There are apps that you can use, and that's an easy way to track mileage. I use my trip meter. So I set it and then I write down the mileage. It's maybe a little intensive, but I found it's more accurate personally. So that's what I do. I keep a record. There is a provision that they've brought in that if you keep a full record for a year, the next year, if your mileage is about the same level, you can keep 3 months. I just keep the whole thing because honestly, I'd rather not have to scramble to use Google Maps or to do whatever to figure out where I've been, if I even remembered. The other thing that you need to do is remember you cannot go from your home directly to your office and claim that mileage. They're getting a little picky. Yes, it's true. Because, I mean, that's part of doing business is to be in your office. But that argument is not going to fly. So, knowing your mileage, keeping your mileage, run an errand before you get to your office. A business errand, not a personal errand, so that you can claim that if you really want to. A couple of general things, or one general thing anyway, I think we've covered the rest of it. Fading receipts. If you can't prove it, they won't accept it. So, gas receipts as an example, you have to keep gas receipts in any of the maintenance parts if you're going to claim mileage, because mileage, of course, allows you to claim the same percentage, your business mileage of your total, of any of the expenses that you have for your car as well. So it can be worth it. But if your gas receipts are fading, if other receipts are fading, then they won't be accepted. So it is acceptable to take an image and store that image. You have to keep both. It also is better to keep them in a cool, dry place so that they don't, not your windshield dashboard or your car dashboard. Don't keep it there, but keep them in a place where they won't fade as quickly. Or you can, that's the best one. I mean, taking a picture, you can photocopy. Not many of us have photocopiers anymore. That seems like a very corporate thing to do. Could I have the next slide? Okay, this is the impact of reducing your income to nothing. There's a couple of major ones. One is, some people have done that. One of the things that is really sad is people who know me know that I became very ill at one point in my entrepreneurial journey. And I wasn't able to really earn money because I had to go through treatment. What happens if that happens? So if you can't claim, you may not have insurance, but what if you're aging and you can't claim CPP? If your CPP won't bolster you, then what do you do in your retirement? Because we can't always predict what's going to happen. We've seen that so many times in the last 3 years. So think about what would happen if you needed to have income to qualify for something. Now, another thing that I mentioned was the plumber who didn't qualify for their mortgage. Right now, the stress test is increased, as far as I know, so that you need to have the income that will allow you to live the way you want. So what if you don't qualify for just about anything because you don't show enough income? Not that you haven't got the income, but that you don't show it. So that's the interesting thing. What will you do if you can't get benefits of any kind? So that's worth thinking about. One other sort of related factor I wanted to mention is that the CRA is an interesting tax system. I know interesting is one of those words, right? But what they do is they allow us to claim expenses that may or may not look exactly to guideline. But if we can prove that they do conform to expected use of, revenue and expenses, they'll allow it. So it doesn't always work as easily as it sounds. But one of the things that you need to do is make sure you keep records so that your expenses can be proven. You will never get a review or an audit that's last year or the current year. They will never do that. They will wait 2 or 3 years down the road, just as they did with my review, where you have to make sure you can dig through your receipts and so on, dig through your expenses and make sure that you can prove it. Now, I have met people in my classes who got some bad advice, and they started doing crazy things like claiming 100% of income or meal expenses as an income expense. And, thinking this isn't right. Or they could write off this and that and the other thing. I'd be careful about what you write off, because if you can prove it, great. If you can't prove it, then you're likely to have a problem with CRA, and that is not a good thing. For one thing, CRA will be on you forever and ever. So keep your proof, and also, make sure that you're being reasonable with your taxes, so that you don't have to deal with it. There's a story, not a tax thing, but my in-laws had a neighbor who answered for them when one of the government officials were surveying residents so that they could provide voter information. This was many years ago. English wasn't their first language, and so there was a little bit of a language problem with both the person helping out to provide information and the voter person. So they said, well, who lives in the house? And they identified, George and B. Those were people who lived in the house. And also Beatrice. And the voter registration person asked if they were over 18. And they said, yes, yes, quite elderly. Well, Beatrice was able to vote in the next election, but she was actually a dog. So that caused a little bit of issue with my in-laws. One lesson, don't have neighbors report on your official information, which isn't probably possible now. But second, keep your proof on what you're doing. And please don't expense your income down to nothing. Can I get the next slide, please? Nikki, thanks. All right. Why do you keep up to date with your books? There's a couple of reasons. Have you ever had to take a box of receipts to a bookkeeper or an accountant? First of all, start with a bookkeeper. Most of them will be able to help you. It's not necessarily regulated. So when you're looking for a financial person, get somebody's recommendation so that they know what they're talking about. So they have a good track record. They're not just doing it on the side to earn a little money and they really don't know anything. That's a dreadful situation. If you keep up your books, you're going to save money, because if you have ever had to take a box of receipts to somebody, it's awful. They will charge you for every little bit of work they do. Isn't it better for you to take an hour aside a week or 3 hours a month? Something to be able to say, okay, I'm going to record all my expenses, whether or not you keep it in software. And that's one of the questions that we have had. Well, do I have to get a software program? And what software program do I have? You don't have to. You can do, the CRA does not mandate how you do your taxes. It is, once you learn the software, it's often more efficient to be able to invoice, to be able to keep records and so on. But it's a learning curve. So don't kid yourself about that one. But do you really want to write it down on a piece of paper that can be lost? No. You can use Excel. That can sometimes happen. But don't please, use that time to not do your books. You don't want to pay the money to get it done. So software, often QuickBooks Online is very entrepreneurial friendly, but talk to your bookkeeper about what you want. If you are an incorporated company, you need an accountant, and the tax bill for that will go up anywhere between, say, $1,800 and $2,500, $3,000, depending on how complex your books are. So bookkeeper, maybe $50 a month, depending on their skills. Don't go cheap, please, because they could do this so much faster than you. It's unbelievable. And you don't want to put your bookkeeping in the hands of somebody who doesn't really know. So if you need to ask for a recommendation, ask me. I've got some really cool graduates who are bookkeepers. Can I have the next slide, please? This is quick. Big mistakes. Big mistakes. Do not finance your business on a credit card. The average credit card rate, well, a good rate is 19.9% or something like that. It can go up as high as 23, 24% per month, and it's cumulative. So there's got to be a different way to do that. It's a desperate way. Unfortunately, I know somebody who actually lost a house because they finished off a house they were building on credit card. And unfortunately, one of the two lost their job down in Toronto. And they couldn't find another one that will pay them the same amount in the local area. So they actually lost their house. Do not do this. And there's got to be funding alternatives, but you have to kind of get to know them. And unfortunately, you know, the requirements for funding are quite strict. So enough of that one, Nikki, if I could have the next slide. It's not so much fun, that one. I think that's not clicked forward. There it is. There it is. Okay,
Yep, you
part 2. I can see it now. Yeah. So watch your credit score because that makes a difference. Equifax is one of them. There are others, but some of the retail ones you hear about, Karma Credit, be careful. Watch your credit score because anything that can go in there, it could be wrong, for example. It could be reported wrongly, but it makes a difference if you know your credit score and try and keep it at a good level. In the 700s is excellent. 500, not so much. So you can talk to people about that and see where you are. One of the mistakes that people make sometimes is shopping around for a loan. And rather than going to one bank or one person, they go to each different financial institution. Each one of those will do a credit report. It has a hit on your credit rating as well. So just little things like that, but keep watch on what, you know, makes a difference for your credit score, and keep an eye on your debt, because debt is, with the interest rates as they are going up, it's a really good idea to kind of do the old-fashioned thing that our parents did and pay down debt if you can, because it just is one of those things that eats away at it. Can I have the next slide? This is big mistakes, part 3, the last one. Ignoring your numbers entirely. There are, I think you've probably heard me say, dire consequences, and sorry to be a bit of a downer, but this one is a completely avoidable mistake. So if you don't know how to interpret your numbers, find out. There are people who teach this. There are people who teach bookkeeping software. There are those who can show you the way, and you need a good bookkeeper at some point. Even if you use a bookkeeper before you really, really need them, they're only going to take a tiny amount of time per month to start setting you up and keeping you on track. So that is really important. Do pay attention to your numbers and look for the patterns, because as I said, if you've got 3 million streaming services, you're paying a fortune personally for something you probably could pare down. And cell services may be another one of those too, just saying. Can I have the next slide? Okay, here's a summary of 10 tips to remember. And you can read this just as easily as I can. They have a theme. And oh, look, barter is spelled without an R. Oh, well, so you know what I mean. But set aside your taxes. Set aside, take a few minutes to look at your numbers. Call and negotiate versus ignoring brown envelopes. Pay taxes on time if you can. Trade involving barter, trade invoices. Don't reduce your income to zero. Don't overuse credit, and do get a bookkeeper when you've got an opportunity to start learning how to do this properly. And I think that's just about it. So if you go to the last slide, I can take questions. And if you've got anything that's of concern, do you want to moderate that, my friends, or what do you want to do?
Yeah, let's just check to see if does anybody have any questions at all? I'm happy to respond.
I wasn't able to really look in the chat, so.
We were looking and there weren't.
Oh, you are fabulous.
There were some commentaries, yeah.
Okay. Do not round your tip up amounts and don't tip on tax. That's true. You know, there are ways to save money. And let's face it, we want to reward our servers and people who look after us, people who do what they, do their service provision in a great way. But yeah, you can do that.
As that one that Emily gave us a couple of months ago.
There you go. There
Oh
you
yeah,
go.
Sarah, you should be able to unmute.
Hey, great.
Nicole. Oh, you got it.
Hello.
Perfect. Hi.
Hi, I just have a couple quick questions. Thank you so much for this. This has been really informative for somebody who's just so new. So I have quite a small business at this point, and the bookkeeping aspect, I haven't been completely ignoring it, but it's definitely instilled a little bit of fear. So as an online coach, I think this is where I'm the most confused, because when it comes tax time, I'm not only getting an income from my clients, but now, I have an Amazon storefront, and I'm also affiliated with a couple companies to which I can make commissions and things like that. It's obviously all set up on the banking side of things, but I'm having a tough time figuring out how to track that, as well as even just the simple stuff like the transferring of my income from my business account to my personal account. Does that have to also be tracked as well?
Okay, let's take them one at a time. The sources of your commissions and could matter. So for example, are any of them coming from US companies?
Yeah.
Okay. You will want to get a WBEN form in which there's a wonderful thing that they've done. The US government and the Canadian government have a tax agreement so that we only have to pay tax in one place.
Yes.
So if you haven't done your WBEN form and it goes to each of the US organizations, please do that, because it will make your life a lot simpler. And then they will report to you what the income is. So they should be reporting, a summary of your income. If they aren't,
Yeah, they did ask me for that information, for my tax information. So that's good.
That's the biggest one, because you don't want to pay US taxes and then Canadian at the same time.
Of course.
I would be absolutely the best protection is knowledge. So if you're tracking everything yourself, then you can pick up an issue. Let's not, with love to banks, I don't totally love banks, but I've got a great banking account. Go find a great bank and a great account manager. But they miss things too. And one of the things you might want to do is get some software that will allow you to do banking reconciliations as well, right? Not everybody does. We used to have and I'd have to look and see, because we don't have a coaching call with our bookkeeper until June. But what she would always do is say, Wave does this, QBO does this, we still like QBO, QuickBooks Online, as a software that covers everything. If you can do the bank reconciliation, so you attach it to your bank, the information comes in and then you reconcile it. That way it allows you or your bookkeeper to find a mistake. And that's what you want to be concerned about, that something isn't reported and all of a sudden it's reported later when it's maybe not as convenient. And so the software is probably a good opportunity, because you've got many things that happen. And to answer the other question, do you have to report income? Absolutely. So are you a solopreneur?
Yeah, just sole proprietor right now.
Okay, all right. So everything gets reported. All your business and your personal income or your business income and your employed income, whatever you've got, it all gets reported. It all gets mashed together in one place in your tax form, right? So that's great. But you also want to be able to track what you're taking out of the business. You just need to track everything. It all comes into one area. Later on, if you're incorporated, one of the things that can happen is that you can take a draw on the company. So you do a dividend, or you do something really fancy, right?
For sure.
Now you just want to keep track of what you're paying yourself.
Yeah, because I use Stripe right now for
Okay.
invoicing and such. And they take off the lovely little fees that they like to take off of everything, whether you create a subscription or it's just creating an invoice or whatever. And so
Wow.
I'm struggling because I find I have to go into my Stripe, figure out, okay, what is the initial fee, and then deduct my tax and go into my bank account every single time and deduct the tax off the HST, everything, put it in a separate account
I
from there.
love
Like
that.
it's getting a little bit convoluted, you know, so.
Well, it does. I'll tell you the truth. I invoiced at the very beginning on paper in a Word document. I created a template. I had to calculate it, but I did that myself, and I saved them, all of them. And I also tracked them to make sure they were paid, because if you can create an invoice, but it's really good if they are paid. The beauty of using Stripe or PayPal or any of those is that if you send out, I often now use PayPal invoices if it's, it's just convenient in some ways, but I do it on a monthly basis. I don't do it every time. I don't, record the fee and the cost of it and recognize the revenue until the end of the month, because it's a lot of work, right? As you said. But you can use a number of ways of invoicing. If it's easier for you to invoice in that banking software like Stripe or PayPal, then do it, because I know that that's easy. I can send it to my client. I can remind them, right? If they are forgetful, and it comes in and it's there. They take a percentage. So you have to decide if the cost of doing that business in that way is worth it. Is it worth your time? Is it worth your, effort? Because you can use invoices in software too. But then how are you going to get paid? Are you going to get paid, often credit cards are the easiest, honestly, or an EFT, electronic funds transfer.
Okay.
There is some work, unfortunately, in tracking it. So I would just look at it. What's the best use of my time? Do I have to do this every single time, or can I just do it on a monthly basis? That's what we came to. Do I want to do it manually? Because I'm just starting out. Do I want to be able to have, the luxury of pressing a button and reminding them rather than calling them, and say, hey, you didn't pay my invoice.
Sorry, Patricia, I'm just going to jump in because we have 2 minutes left.
Oh dear. Okay.
Just to see if there's any other questions at this time. And thank you for that former question.
Thank you.
Do you know what? And if you've got more, there's a link on the screen to my calendar. If you want to book a call, I'm happy to do that.
And that's a wonderful part. So Patricia's offering a free call to anybody who would like to connect with her. And as somebody who's received advice from Patricia in the past, it's well worth it. She has so much information to put on.
Thank you.
Which we've used many a time.
We have to stick together.
Yes.
It's true. The link is questions, get on a free call. It's on the screen. It should be.
Oh, and Sarah, you know what? We're going to be sending out a copy of the deck.
Well, hang on. Let me put it in the chat.
Yeah, you can put it in the chat. That's great. We will send out a copy of this conversation and the deck to everybody so that you have it.
Okay, cool. Thank you. And thank you for your patience when I didn't see that the slide was moving. Appreciate that, Nicole. It's Nicole, right?
That's okay. No worries, Patricia.
How many Nicoles?
Nicole, Nicola. Yeah.
Someone's going to get the slide to go if you just say Nicole.
That's right.
Exactly. It's so good to see you. Okay, everybody, thank you again for joining us today. Always thrilled to have participants come on, and hopefully everything was helpful. We do strive to have these on a monthly basis. We take time off during the summer, but please have a look out for when we start them up again. And again, if you have any questions for Patricia, the link is in the chat, and any questions for Local Street, you can contact us at info@localstreet.ca. And thank you again, and have a wonderful day, everybody. Thank you for doing these. This is a great idea for entrepreneurs. So thank you.
Thank you, Patricia, and thank you everyone for attending today.